If you don't understand the difference between internal and external market structure, you will keep entering too early, too late, or against the real trend, especially on Volatility 75. Now, in this video, I want to show you exactly what internal structure is and what external structure is, how they work together on V75, and how professionals use them to time entries. So by the end of this video, you will stop guessing trend direction and actually know your structure mapping very well. Now, market structure, I believe by now you should know the basics because I have talked about it over and over again. Market structure is simply how price moves in the market, how price moves. When the price is forming a pattern like this, you say market is trending downwards. That means we are going to be selling because market is forming lower highs and lower lows. But when the market moves like this, we say market is bullish because we are forming higher highs and higher lows. Now you need to understand that on V75, price moves fast, and as price moves fast, fake breaks are also common. And if you don't know which structure matters, you will end up getting trapped in the middle of the whole thing. Now, I want to talk about external market structure. And external market structure is the major trend of the market. It is the structure that actually controls the direction. Now, okay, let's quickly zoom. Let's use the H4 time frame on this. When you want to mark your external structure, I will advise you use either your daily or your H4 or your H1. So now, looking at this, can you see what happened here? What can you say about this structure? Right here, I'm seeing a downtrend. A downtrend. Remember what I say a downtrend is? Market is forming lower highs and lower lows. That means market keeps breaking the lows. Keeps breaking the lows. So in this case, what we have is called a downtrend. Now, you either use your daily time frame, your H4 or H1 time frame. Please do not go below this for marking your external structure. Now, what we want to look for right here, we want to look for clear lows, clear lower highs and clear lower lows. Why? Because the market is bearish, it's going downwards. But if the market is going upwards, we look for clear higher highs and clear lower highs. Now, small candle breaks do not change external structure. Noise does not matter. We want to see a clear break. Can you see this? Market broke clearly. Market broke clearly. Very clear. You're not second guessing the direction. The break is very obvious to you. So only these good impulsive moves counts. If there was noise all around here and probably market went back up, you don't count that as a break of structure. Now, most traders actually think that every break of structure is a trend change. No, 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 no. See, for external structure, we want to see a clear break. Whatever is happening in here does not actually matter to us. Because, okay, now let's see. When we go down, okay, let's say this break right here. Let's say this break right here happened. And you know how I trade, I would want to see market retrace. that is pulling back so I can get a good entry. Now let's say this market broke structure and we go down to M15 time frame. When we go down to M15 time frame, this is the break, right? This is the break. This is the pink line I marked. Market broke and kept going downwards. Now notice what happens here. Market kept going downwards. Now that single leg of price that you saw on H4 time frame, can you see what it is doing here? We're having smaller structure right here. That is what we call internal structure. Those smaller structures. Then notice what happens at this point. At this point, the direction began to change. It broke this recent minor structure and started moving upwards. This is what we call internal structure. This is internal structure. So that brings me to the second part, which is internal market structure. And permit me to tell you that this is where you actually see details of what is happening. Because let's say you're looking at H4 time frame. Now you're looking at H4 time frame, and when markets broke this strong impulsive move, then you were waiting for a retracement. As market was retracing, you don't actually know what the market is doing. You don't know when the market is trying to go back down. So that is where you need to see what is happening on the internal structure. Now, what is going on the internal structure is what will help you to time your entry. So as market broke this place, what I'll do is I'll go down to the M15 time frame right here. I'll go down to the M15 time frame. Sorry. Okay, let's zoom out so we can locate where we were here. Right here. Now I'm down on the M15 time frame. So this time frame will now help me to look at my internal structure and see what is happening. Now I can see the pullbacks clearly, I can see the corrections, and I can see the short-term counter moves. Now the counter moves are this move. Of course, from our H4 we know that this is a bearish market, but then despite being a bearish market began to do something. It got to this point and it bounced and started making a counter trend. Now if you don't know your market structure very well, this is where many traders fail. When they were on H4, they saw a downtrend. They moved back to H15 and they saw market printing higher highs and higher lows, and they're like, oh my god, I should be buying. And they start taking buy trades, and before they know what is happening, the market takes them out, hits their stop losses and moves down. And they're like, oh, trading V75 is so difficult. No, my dear, it is not. This happened to you because you don't have good knowledge of internal structure. Now the internal structure reacts while the external structure controls. So you need to know what is happening in the internal structure. You use the internal structure for your entries, you use it for your refinement, and you use it for your timing to know the appropriate time to join the sell trade, to join the sell or the short position. Okay, while you use your external structure as your main direction, as your bias and for target. Because now looking at this H4, look at this H4 time frame, when I catch an entry maybe around here, I would want to target this low. I would want to target this low. This would be my target. So you use the H4 for your target. Now, can we talk about the internal break versus the external break? Oh, okay, I've mentioned a little bit of it, but let's go over it again. The internal break occurs when a minor high or low is broken. Okay, now looking at my chart right here, you can see market was going up, going down, going up, going down, and this is where my break happened. Right here, the market broke close to the downside, and the moment market does this, I would say, okay, I would be on a lookout for an entry right here. Okay, now what it means is that there's going to be a possible continuation or a setup is forming. Now, what is external break? Let's talk about external break. We go back to our major time frame because that's where we see a picture of what our external structure looks like clearly. External break talks about a major swing high. Now, this right here is a major swing low. This is a major swing high. This is a major swing low. This is a major swing high. So when market took out this low right here, it has broken a major swing low. So that is our external break of structure. Now, how does this work together? This is the very important part, more of what you need in order to trade.